Good morning, everybody. Hope everybody's doing well. Good morning. Good morning. We'll get started in just a couple minutes. Just going to grab our updated TradingView script real quick and go ahead and get that updated for this morning here. Just copy and paste it in there. If you're not familiar with our TradingView scripts, I posted a little blurb this morning, or you can go to our blog post at gameedge.us and you can check those out. Right here, blog post. And you get taken down to discussing our all of our thesis here at GameEdge, as well as option structure, and then discussing our transition zones also. So you can check that out at gameedge.us. So you can see it's already interacting as I posted this morning with key levels there in trans overhead on SPY, in trans 604 to the downside on Qs, as well as 0 gex to the upside there, and then oscillating right below the positive transition level on IWM, right around 0 gex and in trans there. So, all right, we'll give everybody another minute to scoot on in here, and we'll get started. All right. Okay, we'll go ahead and get going here. Let me grab one more chart for everybody. Pull this one over here. Get rid of this one. Okay, there we go. All right, good morning, everybody. We'll go ahead and get started this morning. This is Michael coming to you from GameEdge on Monday, February 23rd with our pre-market prep session. As always, we'll cover those 3 pillars: sentiment, structure, and trend, and then we'll look at the 0DT structure as well as some individual equities. If you're joining us and like to post those tickers in the chat, we'll look at the structure at the end of the presentation. So let's jump right into it. If you review our open mic last night, we discussed what the structure looked like as well as the market trend model. We had a significant linear update on Friday. This is orientation is the bolded white line as your intraday instantaneous cumulative tick. And then the other are these railroad tracker momentum moving averages. This is your 1 to 3 day trading time frame. Bolded white line is your intraday instantaneous time frame. And then your colored ribbon is the longer positioning in the overall market. So we've recovered those momentum moving averages and had a linear update on Friday. The filtered cumulative tick plus 1,000 minus 1,000 larger block orders, institutional orders, was to the upside also. So institutions were present and accumulating, and then new highs significantly outpacing new lows. So everything looks constructive here on the market trend model, recovering back to the upside after significant consolidation that we discussed for multiple days. So now we'll just continue to watch this and see if this continues to the upside, indicating accumulation and more participants buying than selling within the overall market. Same thing with our trading view market trend model. Obviously intraday instantaneous, we recovered those momentum moving averages really quickly. That's these orange, blue or cyan and white, and then now they're stacked in the proper order. And then our intraday instantaneous is moving to the upside, also above those momentum moving averages on both the sources there, the ARCX, which is a little bit more quality tick, as well as the tick US, which is all the exchanges also. So again, we'd like to see this continuing to the upside, indicating more market participants are buying or accumulating stocks than selling if you want to see price appreciation. All right, let's go ahead and jump right in the SPX, largest, most notional value options complex. This is our cruise ships, or what we call our tankers. We separate the SPXA from the SPXP. SPXA is more institutional positioning. These are monthly expiries as viewed by our web app here. We're call dominated above and below spot price there. You can see those key areas below us with the positive net delta and net charm, positive net charm there at 68.50, a large there at 6,800. And then overhead, we have the 69, basically 69.10 level, 6,900 there. And then all the way up to 7,000, we have significant speculation up towards that direction still. And you see, obviously, the wide transition here. So again, we'll continue to watch this as we just had the monthly expiry. And we'll watch where this capital is deployed after the monthly expiry for the March OPEX. All right, moving on the SPXP. Again, upper quartile picked via our web app here. So these are the highest weighted total OI expiries within the next few weeks to months, as noted over here, 74% of total OI. We are call dominated. Structure is out of the money. Speculation continues to the upside towards that 7,000 level. You see really within that 7,000 and 6,800, we'll call it 6,850. Structure is fairly messy as you just see the greens and reds back and forth. Again, this is uncertainty in positioning, even though we have a narrow transition area. So we'd like to see this clean up, have a definitive transition area where we have call dominated to the upside and either call dominated to the downside or out of the money puts to the downside. And we see a clear delineation. As of now, it's fairly messy within this overall area. And you'll see that really delineated on the 0 DTE. But again, key level here, 68.95 to 6,900 transition area. The bulls want to be above that for an opportunity for price appreciation, a little bit more favorable call dominated positive gamma, volatility dampened environment for a move to the upside below this, and then into a put dominated area or a little bit more volatile with negative gamma conditions moving to the downside below the transition area. So we'll continue to watch that delineation and dividing line there at 68.95 to 6,900. All right, let's go ahead and jump in the GEX ratio, SPXP. Again, this is like a put call ratio, but we add a time component, which is gamma. So this is short dated call gamma versus short dated put gamma. Again, noticing the SPXP with the price appreciation, but our GEX ratio continued to drop. So this means out of the money call speculation was not supporting the price move up on Friday. So we'll see if this continues to indicate the same, or we actually see the out of the money call speculation start to come in and override the short dated put gamma. And this would put this in a positive slope, this red dotted line. But now we're back below 1. But this is spot price sensitive. So if we gap up and capture some of those out of the money calls, again, this could drive the GEX ratio back to the upside. But as of now, we're below 1. So a little bit of edge to the bears there. But again, depending on where spot price opens at, this could actually jump up to positive and then grab a positive slope if we see out of the money call speculation come in. All right, SPXP delta balance. Again, this is separating the left-hand plane from the right-hand plane. So I posted a net stat command this morning, which we'll go over also. Again, the right-hand plane, this green dotted line is your out-of-the-money call speculation. You want to see that driving above 0, indicating out-of-the-money speculators are targeting higher prices. That means our book is getting longer, dealer book's getting shorter, and they have to buy to hedge. And then the left-hand plane, the red dotted line, that's your in-the-money calls below or out-of-the-money put speculation or hedging. Again, we're just below the 0 line with a slight negative slope. Again, you'd have to get your microscope out, but it's fairly flat. So again, that should be supportive on pullbacks to the downside unless we see out of the money puts come in. significantly, driving this line towards the negative. The right-hand plane is actually dragging the delta balance down towards -1, though. So again, that's a little bit bearish. We do see a recovery into the middle of the week. Obviously, roughly around Wednesday, we see that that delta balance start driving up, most likely driving with the left-hand plane, but we want to see the right-hand plane participate also, with that out of the money speculation. So we'll continue to watch this day over day and see if this improves. Again, this is spot price sensitive also. So if we gap up significantly above 6,900, or we do reclaim that 6,900, then this will put this in a more positive outlook too. All right, SPXP net stack command. Again, I posted this morning about how 7 or 8 points could change the overall structure. So if we were below 68.71, this transition area, this would actually turn this to out of the money puts. And if the spot price is below that, that'd be a little bit more negative overall structure. Difficult for price appreciation. And then 68.50, those in the money calls, that should be supportive as long as we're above that level. And then you can look down the net charm and net gamma levels, understanding this left-hand plane. And the right-hand plane, again, we're still in the money put dominated above us up towards 69.25. So it's going to be difficult, even if we get above 6,900, for a significant move to the upside, unless we see intraday call versus put speculation being driven by those out of the money call speculators targeting higher strikes to the upside. You see net charm, obviously out of the money calls, if we're below 6,900, those will continue to grow and be a headwind. And then you see the transition area at 68.45. Net van, a slight edge to the right-hand plane. So if we see volatility drop and out of the money calls come in and we retake 6,900, then we could have a Vanna tailwind for a move, most likely up towards 69.25. So again, we have the opportunity for a move to the upside. We do need to reclaim roughly 6,900, and that would drive us on multiple Greeks aiding the move up. So we'll continue to watch that intraday, and we'll watch our net stack command. All right, let's look at the 0DT for today. Call dominated. I actually did not refresh the DEX transition on the one I posted on X. So here it's refreshed at 68.95 to 6,900. And then you see the GEX transition fairly wide there. And then the drunken sailor range, again, extremely wide. The reason it is because this low net OI here, again, low net OI exposure is uncertainty from market participants. And this is easily driven by call versus put speculation. So depending on what the volume is coming in on the call versus put speculation, if we're seeing 600, 700, 800 contracts minute over minute, depending on which direction those are speculating, calls to the upside, puts to the downside, this could drive spot price very easily because of the low net OI exposure. If we were seeing thousands in here, it would be much more difficult to move price easily, as we'd have a much more robust structure, obviously to the downside and to the upside. But with this low net OI, again, it could be extremely choppy within this drunken sailor range, even until we recapture 69.50. I talked about 6,900. We recapture that. If we see out of the money speculation come in the increased volume, then we could drive to the upside. But you see a couple other areas there overhead, 68.25, 68.35, which could be some stumbling blocks to the upside also. So again, call dominated, should be supportive on pullbacks towards 68.75. I think we're at 68.80 pre-market, and then 68.60, 68.50. These should all be supportive and stabilizing, as you could see via the positive net charm, unless we see a large sentiment and structure change for driving to the downside. All right, we'll get into individual tickers really quickly. First, I want to go over GameEdge.us newsletter. Sign up for that. You'll be delivered on the weekend. Beyond the Bell, again, goes over our thesis, our trading strategies, and how we navigate the SPX option structure. And then click on our free courses, GameEdge Fast Pass. Again, this is our flagship options course. You can go through that before you even join our Discord and have a head start and be ready to jump in for trading. And then products, pricing, you can click on our blog, has a significant education blog post. And then pricing, you can go to our Discord, 14-day free trial, all the tools turned on, and you can join our trading community, and we'd be happy to help you get up to speed. So, all right, let's go ahead and jump in some individual equities. I see some people posting already. Let's look at Meta. All right. So systematically, obviously, we'll go ahead and look at Monday's expiry, and then we'll look at the upper quartile. So for Monday's expiry, we put dominated. You see we're actually below or slightly above transition there. So we need to stay above transition, but upside speculation is going to be difficult as we're right at PGEX and we have in the money puts overhead. Let's go ahead and look at the quartile. So again, Friday expiry here, call dominated. You see the upper quartile structure looks fairly good. You're right at the transition area for the upper quartiles. You'd like to be above that. Again, a little bit messy to the downside here. Speculation to the upside towards 700 on Meta. Out of the money call speculation looks decent, and then supportive on pullbacks. But if you're within this area below transition, this could be probably extremely choppy though. But all in all, Meta looks fairly decent for supportive and possible move to the upside. Again, this is all predicated that the market and the market trend model continues to be positive and supportive. Obviously, if the market trend model deteriorates, 75% of stocks follow the overall market. So most likely you'd see a move to the downside. All right, let's look at the upper quartile on MU, call dominated. MU structure still looks great. I looked at it last week. Everything looks good on MU, even though you're inside the transition area. Supportive to the downside. It looks like you have some puts right around spot price that are probably opportunistic, probably taking advantage of a slight pullback. But MU looks good through the whole structure. 440 to the upside there. And then the upper quartile is up towards 450. Structure looks good there. I'm not sure when MU earnings are, so you may want to make sure that you keep that on the radar. NVIDIA still looked good. Everything looked good on NVIDIA. Nothing's really changed with the overall structure. 200 to the upside. Call dominated for today, even into Friday. Let's go ahead and pick Friday's expiry. Call dominated, 195, supportive. Above transition, NVIDIA still continues to look great. 200 to the upsides, that key speculation area. I think we've been talking about that for weeks. Obviously, I know NVIDIA earnings is this week. So again, structure looks good, but again, earnings are wild cards. So I would not really be positioning for anything this week until after earnings. So that's just my opinion, not financial advice. So, all right, let's look for Google here. Call dominated today. Spot price above transition. Everything looks good. Probably not a significant amount of upside for Google, though, unless we see speculation come in intraday. Let's look at Friday. Call dominated. Looks good. 330 is going to be difficult to get over if you get a large move to the upside. And then let's look at the upper quartile on Google. Looks good. Green net delta all the way down. Supportive above transition. I'd look for 310 to hold. 300 at the least. And then speculation up towards 350. So Google looks great there. So. All right, let's go ahead and jump over to our trading view chart. This is what we're looking at for today. Again, already went over this on the 0 DTE, but transition is going to be key, 6,900. And then you have upper area of, sorry, let me drop that down towards 68.90. Let's do that. That's fine. Transition area is key there. GEX transition and then drunken sailor range to the upside, 6,950. So if we get above 6,900, I'd anticipate 69.25 would be first, as we discussed on that 0 DT, and then 69.30, and then we'd look for the upside 69.50. Again, to the downside, supportive on the transition areas, and then down towards COTMP 68.76, which unfortunately that's where we were chopping at last week, 68.75, down towards 68.50. I'd anticipate that to be supportive, at least from the 0 DT structure and how we were looking heading into today. So, all right. Okay, thanks everybody for joining us. Again, GameEdge.us. Check us out, like and subscribe on X and YouTube. You'll be notified when we go live with content or post any content, and we'd be happy to have you in the Discord and help you get up to speed how to navigate the SPX option structure, as well as individual equities. Our P-Trans to PGEX and our wheel strategy portfolios are on today because of the market trend model, and I talked about we talked about the P-Trans to PGEX on our open mic last night. So, all right, manage risk, everybody, and make it a great day. Thanks.